It falls 2.5% month on month.
Okay, good morning, folks. Good morning, folks. Hopefully you all had a good weekend and ready to fight the week ahead. For those that don't know, well, it's on the screen here. My name is Andrew Lockwood and welcome to the Trade Zone. This is my fourth. Well, let me turn my squawk down. That's a squawk that bellows out information to me throughout the day. I couldn't trade without it. Welcome. This is my fourth time on Monday. Mondays and Wednesdays we're doing here. God, that month has flown by. For those of you that are joining in for the first time, as I always say, please interact. Let me know where you are from. Let me know where you're tuning in from. Also, let us know the level of experience that you're at as well. We'd like to know who we're sort of pitching out to, so we know how to gauge this. I say this is my last week. Next week you'll have a new guest speaker on. More about that later. Now, the purpose of these is basically to give you a bit of an insight into how we trade the markets, how we sort of map out our week ahead, certainly on a Monday, but how we also trade the markets. Hopefully you can deem something from that. I always say that if you are trading the financial markets, even if you're not a fundamental trader, that you should be aware really of what the sort of big macro news coming out for that week is. So basically what's driving these markets, which is why I think Mondays are very important. I like to normally do mine on a Sunday, family permitting, basically map out my week, just sort of a bit of a playbook, if you like. And there's no better way to do that now than using the Eightcap weekly calendar, which is now available to all of us here, which I'm delighted to say. And here it is. It's basically, I think, a much improved economic calendar than I've seen elsewhere. Now, you need to access your Eightcap portal to be able to access this. And that way, you can just scroll down here to the left, you'll see economic calendar. Okay, so what I like to do is maybe map out the key events. Last week was a big event, inflation event week for the US. It has been, a lot of data came out of the US last week in terms of CPI. We had retail sales, we had producer prices, all inflation. This week is a bit quiet. I'm going to talk a little bit more about the US last week after this week's review. But this week is a bit quiet in terms of the macro view. So there's not a lot of information that we can sort of pitch or hang our coats on this week in terms of economic releases. Couple of bits which I'll go over now. What you need to do basically is head up to here. You see Monday, Tuesday, Wednesday, Thursday, and Friday. It basically gives you sort of the week ahead. The reason why I like the Eightcap version is because it gives you a lot more information than just the estimated read. Okay, so it gives you a bit more about what the actual read is all about. It also shows you the history of that economic release as well. Now, today is basically a holiday in the US as well, so there's nothing coming out of the US, and indeed, I think Canada is closed as well. I think the US is closed for President's Day, so there won't be much action out of there. So not a lot going out on Monday, but basically it's Tuesday when we start to see some activity. First of all, you've got the RBA minutes. Okay, the RBA minutes, that's basically the RBA, they, like every central bank, meet every month to decide on where interest rates are going. And this is basically a recap of what they were discussing during their meeting. So sometimes there's something to be deemed from that. Are they more hawkish? Are they more dovish? So if you're trading the Australian currencies, you certainly need to be aware that there could be something out there. I don't know if this is going to be a massive impact. They've got it down as high impact news. Obviously, it's in red. Maybe not, depending, of course, what they say. But certainly, if you're trading Australian currencies, you should be aware of that. If you scroll here to the right, you'll see the other news releases as well. Low impact is green. Medium impact is orange, and of course, as I've just shown you there, the red is high impact news. D is that's the German market. So we've got some data out of Germany, but more importantly, I think for this week, I'd say for Tuesday, we've got the Bank of Canada Consumer Price Index. Okay, so as you know, or maybe you don't know, but as you will know now, is the Consumer Price Index is basically inflation. It's basically what drives all central banks to make their rate decisions. What is happening to inflation? Now, inflation across the developed world has been surging. Even surging in Sweden came out earlier this morning, I noticed. But basically, inflation has been driving higher across the whole developed world. Bank of Canada, I think it's an important one. It is high impact news. If you saw what the central bank said last time out, the central bank have basically said they're going to be pausing interest rates. They've been moving interest rates higher. I think they've moved 8 times now, 2022. They are going to pause their interest rate hikes until they see what's happening to inflation. So consequently, tomorrow's read for Canada inflation, of course, is quite important. Is inflation going to continue that downward path from the highs, or are we going to see sustained inflation as we saw in the US last week? So the markets are going for 5.5. And as I say, if you want to click on it and then you look back down here, you can see exactly what's been happening on the recent reads as well. So it gives you a good clue of where it's gone from. History of the Bank of Bank of Canada's Consumer Price Index. And core basically means excludes energy and food. So that's basically what we're expecting there. So you can see inflation is edging lower. One of the reasons why the central bank has basically decided to pause interest rates for the time being. We do have some UK data out as well. It's in terms of PMI. I think I scrolled past it pretty quickly. They haven't got it down here as well, they got it down as medium impact news. I like a PMI data. PMI in the UK stands for Purchasing Managers Index. It's a forward-looking indicator. And I tell you, central banks love a forward-looking indicator. You know, looking back and what's happened in the past is all well and good, but a forward-looking indicator is something they do like to look at, certainly. And you'll see anything above 50 is deemed to be an economy that's expanding and good for the economy. Anything below 50 is deemed to be an economy that's contracting, not so good for the economy. So any strong numbers will basically put upward pressure on interest rates and upward pressure on the currency. In this case, it would be sterling. Anything lower would be down. So it's interesting to see what's been happening. If you actually look at the PMI, it's been pretty flat recently since you've had obviously the COVID and the war and what have you. But more recently, it's showing a bit of a pickup in the UK economy, which could be indeed good for sterling. I think sterling has actually got a potential to trade higher this week. I'll be looking at that number tomorrow for that. Okay, let's moving on to Wednesday. Take notes of this, of course, and take you can always go back to the economic calendar yourself, but take notes on the ones that I'm looking at. If you wish, the big news out on Wednesday is basically the RBNZ rate decision. So the Reserve Bank of New Zealand are making their call on interest rates. Now, this is an interesting one. You remember, where interest rates go, the currency should follow. If you'd have asked me or asked the economists, I'm not an economist, but if you'd have asked the economists or even myself a couple of weeks ago, I would have said pretty much the RBNZ are going to move interest rates by 50 basis points up to 4.75. At the moment, the previous is at 4.2. So this is penciling in a 50 basis point rise for the interest rates in New Zealand. However, this isn't as clear cut this time out. So there could be some volatility in the New Zealand dollar this week. If you're trading the New Zealand dollar, you need to be aware of this. This is, of course, in midweek, so quite a lot of price action before here. But we need to pay attention to it, because if you look at what's happening in inflation in New Zealand, it has been sort of peaking as well. You also seeing the job numbers. The jobs, still quite a tight job market out there. So there is a definite case to be had for them not to move 50 basis points. So 2 or 3 weeks ago, it was pretty much like a 60-70% chance of them moving to that degree. Now that has shifted. In fact, it's now looking at maybe below a 50% chance that they'll move it to what all the analysts are thinking, 50 basis points. And in fact, I did see a couple of bank economists actually calling for a pause in interest rates out in New Zealand. So it's by no means a clear-cut decision, hence the volatility. I'm personally expecting them still to move by 0.5, which will see a strengthening Kiwi. But the point being is, if they don't move by as much as the markets are expecting, if they only move by 25 basis points, or indeed they don't move at all, very unlikely that, but if they don't move to the full 50 basis points, you're going to see the Kiwi come under pressure this week. Okay, it's already happening actually. The Kiwi is under pressure this week. We'll look at that in a moment. But the markets are expecting now maybe a softer New Zealand dollar this week. Of course, if they do move by 50 basis points, you're going to see that turn around and the Kiwi will regain strength. We'll look at it later in a moment about showing the Australian against the New Zealand. A couple of correlated currencies there, how that's moving. Pretty much softening New Zealand. So keep an eye on that. New Zealand, but also another big event out on Wednesday should be here down towards the end here. It is later on in the day, actually. Here it is. It is, yeah, there you go. Gosh, I was thinking they haven't got it, but they have got it, of course. There for me, doubting Eightcap's calendar. FOMC minutes, the biggest event really, I guess, of the week. We've basically, these are minutes how the Fed were looking at their recent rate decision where they moved by 25 basis points. So the markets will be looking at this for clues as to where the markets will be going. Now, this is a funny one because since the last Fed meeting, we've had quite a lot of inflation data, which has been really, really robust. Okay, so of course, we had the non-farm payroll at the beginning of the month up 517,000, I think it was, showing a really tight labor market. But last week, we had some really strong inflation data, which is one of the reasons why the dollar was like that last week. You had the CPI came in at 6.4%, which is still high. It's still on the way down from 9.2% from last June, but the markets were expecting a lower read. The markets were expecting 6.1 to 6.2, came in at 6.4, showing you still strong inflation out of the US. Then you had retail sales month on month came in at 3%. More people are still spending money on the high street. They're still spending money. That shows you that the inflation pressures are still there. Then you had producer price index as well. Another really strong number came in. All the data came out last week, really strong. So the Fed minutes are going to basically be saying, I think, that, yeah, they're moving 0.25%, but they're still keen to keep an eye on the data and that they will stay higher for longer if indeed they need to on rates. And if they say that, and I'm sure they pretty much will be hinting that, and then you look at the data that's coming out, it still puts upward pressure on the dollar. So anyway, so we pay attention to the RBNZ and FOMC on Wednesday. Thursday, very briefly, we've got GDP out of the US. Again, just scroll through in your own time. Look at these, look for the big events, look for the speakers as well. We've got GDP. And on Friday, I just want to mention this one. It's not necessarily, well, I looked across a few of the calendars. A lot of the beg your pardon, here it is. A lot of the analysts put this at a medium impact. I think it's actually more medium to high impact. Okay, my personal opinion on this one. It's basically inflation, how it affects people on the street. It's personal consumption and expenditure. So it's an inflation targeted to the individual. So basically food and energy and so forth. So I'm interested to see what this inflation number comes out to be. Is it going to be a drop here, 4.1? Previous was 4.4. If this comes back in line of what we're seeing last week, i.e. stronger numbers, that is going to be dollar supportive. So keep an eye on that for Friday as well. So there you go. That is your economic calendar for the weekend. So quite a quiet week in terms of fundamental news, but nonetheless, you need to be aware of what is coming up, certainly if you are going to be trading these currency pairs. All right, let's have a quick look then at the markets, how the markets have been reacting over the last week. This is my momentum meter, and it's the sole reason really why I trade the currency markets. And without this, I really couldn't trade the currency markets. It doesn't predict the future, but it does tell me where the money is flowing at the moment. And as I said to you a moment ago, we've had some really strong data that's pushed up the US dollar last week. The green line is the greenback. That's why I colored it green. It's been showing you some strength. So the dollar has been the strongest currency, and all the other currencies have been giving up ground in favor of the US dollar. This week started off in a bit of a different tone, actually. The US dollar is coming under a little bit of pressure. I'm going to show you in a moment some why I think that is the case. But you'll see here, as I said a moment ago, the Kiwi, the New Zealand dollar, for the reasons I've just mentioned there on their interest rates, is the weakest currency at the moment. So on the basket of 8 currencies, the Kiwi is the weakest currency. Another thing I want to use a deem from this is this blue line. Okay, the blue line, the light blue line is the euro. Now the dollar against the euro, or the euro dollar, as we call it, is the most actively traded currency pair. Ordinarily, and it doesn't always happen like this, but normally when the dollar goes like that, the euro should go like that, just because it's the most actively traded currency. And remember, when you're trading currencies, there's 2 transactions going on. You're buying one and you're selling the other. You're buying the base and you're selling the quote currency, the base being the first currency in the quote. But while the dollar was getting strong last week, look at the euro. The euro was getting strong as well. Not against the dollar, because the dollar still pushed higher. The dollar is the bully. The dollar is the stronger in that currency pair. But the euro is still quite strong. So that basically means that the euro against other currencies is a favored buy. So the euro is stronger against the other currencies. Again, it doesn't predict the future, but it tells me what's happening at the moment. So that's why I like to get sort of like the bigger view, the bigger macro view of what is happening in the currencies. Okay, so let's have a quick look at the DXY. Okay, so now the DXY, I think it might be better if I take it onto this. I can do it on that screen now, I guess. So this is the DXY. Okay, so the dollar index is the index where it's made up of 6 currencies against the US dollar. It's got the Swedish krona in there. It's not the major 8 that we look at. But it's basically the 6 major currencies against the US dollar. And interestingly enough here, okay, and I said to you the dollar was getting stronger. Interestingly enough, we smashed into this daily level of resistance. I think I might even have this drawn in from last week when I came on and did this review for you. This daily resistance zone. So we smashed into this daily resistance. Now this, as I say, the higher time frames you look at for these support and resistance, the more powerful they are, because more traders make up those levels. We bounced off here numerous times in the summer of last year, a couple of times, 3 times or so. When we got back down here at the beginning of this year, towards the end of last year, we're bouncing off at a number of times. We did pierce through, put in this bearish pattern, and then traded down to these lows down there at basically 101. So last week, or Friday, I should say, we pierced higher. This again was a combination of all the strong inflation data that came out of the US. However, this type of pattern here shows me that the bigger players are looking at this level and are now taking heed of this level and possibly pushing us lower. I call these the naked setups. It's a strategy that I teach here at the City Traders. It's a strategy that I've been teaching since I came onto the education space sort of like 6 years ago. I've been in the markets, of course, since the trading days and the trading pits many years ago, 30 years ago or so. Gosh, a bit more than that. But since I've come onto the education space, I've been looking at this type of setup for my longer term plays. It basically just shows basic price action in the form of, I call them pin bars. You may have heard them called hammer candles or inverse hammer candles or so forth. I call them pin bars, or engulfing patterns. This is both. Okay, this basically is showing me a rejection of this resistance zone. We pierced through. This could have easily have taken us back up to the 105, the 106 level. But what it's done, it's basically come into that level of resistance, the previous swing low, and it shows you that the sellers are taking control, pushed us lower. So not only is it a bearish pin, but it's also a bearish engulfing pattern, engulfing the main body of the previous day's candle, Thursday's candle. That's showing me that it's not just me looking at potentially dollar coming to a bit of a resistance zone. Now, I'm not expecting fireworks this week in terms of the US dollar. I'm not expecting a big exodus. I'm not expecting a big move to the downside, but I'm expecting some profit taking, and I'm expecting to see some dollar bias, weakness bias putting into the markets. Okay, and I'll trade accordingly on that. So you're seeing this sort of like naked. I call it naked, by the way, if you want to know why it's called naked. I see all the hands coming up. I call it naked basically because it removes all the technical indicators that many traders like to use. As a floor trader, we didn't have all these indicators in my day. Just basically used pure price, in what's going on in the trading pits in front of us. And then these naked sort of setups are the best I can get to the to what I used to do on the trading floor. Basically tells me what price is doing. Before I used to use my ears and my eyes to see what people are doing. Now I just use these couple of price action patterns, and they can be very powerful. Excuse me. So obviously I use this on a daily time frame. So I know people are very busy in their daily lives. Some of you are considering getting into trading. Some of you are trading. Some of you have day jobs. If you have day jobs and you're not able to spend countless hours in front of the trading screen, this is a strategy that you can really think about maybe adopting. It only really takes 10 minutes a day, 15 minutes a day to do your sort of end of day scans to see if there are any potential setups. We have trading rules as well, which we teach. Basically, we have stops above the swing high, and we have multiple profit targets on the way down, and the next levels of support if you're selling, and resistance on the way up. So very basic trading rules. I'm looking for this at support and resistance. So we got that in the DXY, but of course the DXY is basically made up predominantly of the euro against the US dollar. Okay, the euro actually accounts for I think it's about 58. Well, I know it's 58% of the index. So that's fair to say that whatever happens in the DXY generally happens. You'll generally see the same type of thing happening, but in reverse on the euro against the dollar. So look here. Okay, so this is the euro dollar. It's the daily chart. We've come into this double top old resistance. Resistance in technical analysis is basically often repeated, but in reverse once it's broken. So old resistance will become support, and old support becomes resistance. It's basically where buyers become sellers and sellers become buyers. It's where profit is taken, and it's where stops are cut. So it's basically their key levels, and they're respected multiple times. You can just go back in history to see that, and it just basically happens more often than not. So you'll see here we've got this bullish pin bar breaking through this support zone. Okay, old resistance acting as support, and we put in this healthy looking bar. It's about it's almost 100 pips. Okay, this bullish pin bar is 100 pips in its length. So it's not a small little. I always like to look at that in context with the other size of the bars as well. You can look at that using ATR. So the ATR at the moment is about 90 pips. If you look at that, and it's still quite a nice length candle. Okay, so we've broken through. That shows me that the institutional buyers, the bigger players, are expecting this. This isn't you and me buying this. You and I account for less than 5% of the Forex market. 5.5. Well, it's about 5%. This is the big institutional players that is moving this. It's not me with my small account, you with your small account. Retail markets in general. This is institutional buyers. When you see price patterns like this, you can assume that they are looking now to take this higher. Again, not necessarily going to be motoring on. Certainly not today with the US markets closed, but we're looking at potential move higher for this currency pair. And the way I trade the strategy is looking for the next levels of support and resistance. Clearly, the next level of resistance where you'll take your TP1 here would basically be up, I would say, at this swing low, which comes in around there, about the 108 level. So looking at that, you've got basically got about 100 pips to the upside for TP1, got about 100 pip stop for the TP for the first stop. You always, well, the way we trade this strategy at the City Traders is we exit in two parts. Okay, so we'll exit half at TP1, move stops to break even, and then look for TP2 on the next level, which would be basically up at 109. On that setup, you're going to get about combined risk reward of about 1.5 to 1, and it doesn't need you spending 8 hours a day in front of your trading screen. That's just the euro against the dollar. We trade this across all our different currency pairs as well. So it's a strategy there that you can take away if you've limited for time. I talk about this strategy on all my forums as well. It was my sort of saving grace when it came back to 2005 when I came onto the screens for the first time, moving out of the trading pits. I lost a lot of money in 2005, 2006. I had to wind it all back down to what I used to do in the trading pits, and this was a strategy that got me out of trouble and put me on the right path, as it were. So that is the euro against the dollar. Another currency pair I want to talk about briefly today is the pound against the euro. And now this is this currency here. Let's just move that across there. Okay, so this is our daily chart. Okay, this is, now we mentioned on the momentum meter a moment ago how the euro is looking a reasonably strong currency. When I'm trading these naked day trading strategies, it's not so important. I'm looking for a reversal of that. Okay, remember, I'm looking for the reversal of those bigger trends, because this is a reversal strategy. It's not a trend following strategy. A trend following strategy will tell you to buy the strong currencies and sell the weak currencies. Trade that on the intraday basis. But trading the naked trading strategy on the daily basis can have direction going in a different way. There's absolutely nothing wrong with that. You can be trading 15-minute long a particular currency pair, but have the overriding naked strategy going the other way. Remember, the naked ones, you're looking for much bigger moves. I quite like this. Okay, and I like this for two reasons. Not only for the technical reasons, but also for the fundamental reasons this week. Okay, so first of all, we had this break high of this level of resistance, okay, that we've seen. If you look, I always like to use the line chart, by the way, when I'm using my support and resistance zones. You've got a level up here, okay, of big resistance in here, okay, basically this big A. The line chart removes all the noise, takes away the wicks, the highs and the lows, just looks at the closing price on the daily. Okay, so this is a big level of resistance that we've not seen for quite a while. You've got to drill back a long way. In fact, you haven't seen it. All-time highs, basically. Well, not all-time highs, but all-time highs of the last few years up at that level. And then going back to the candlestick chart, you'll see that we touched that zone on whenever that was. This is like, sort of beginning of February, puts in this bearish engulfing pattern. So there is a naked setup for you that basically gave you an indication that that was going to respect that previous level of resistance. Again, really nice little trade there up at 89, took us all the way back down to 8,800 pips again. But what's important for me is what we're seeing here at the moment more recently. Okay, so this swing high that we saw mid-January, okay, acted as resistance. We've now broken through, back up to retest it. Markets are looking left again. Looking at this, we put in a bearish pattern on Friday. Bearish inverted hammer candle, if you want to call it an inverted hammer candle. I'll call it a pin bar. A bearish engulfing pattern. Sellers overpowering the buyers that took us up to that level, trading lower. Lower highs than the previous pattern on the higher time frame charts. The case is building for this to have peaked out. And I think the move for this currency pair over the next few days, possibly weeks, could be significantly lower. And on a risk reward basis, this getting back down to, the sort of, back down to almost sort of 86 zone down here is more likely than than not. So I'm looking really at this sort of zone down here for rejection of this first profit target, 87 sort of 20 zone, and then back down to the 85 sort of 50 zone back down here. Risk reward, this most probably is not a bad little trade. Now, for those of you that I said there's a couple of reasons why, well, 3 reasons. First of all, you've got back-to-back bearish patterns up there, but also you've got the fundamentals this week. For those of you, and if you're out in Asia Pacific, you mostly don't follow this, but this week we potentially are going to see a breakthrough in the Northern Ireland sort of protocol and Northern Ireland issues that have been going on there with Europe. If there is indeed a breakthrough and some agreement is made, that's going to benefit the pound to a greater degree than it will benefit the euro. I'm not saying it won't benefit the euro, it will, and must be a good time to buy the euro against other currencies again. But against the pound is mostly going to outperform on that. So that basically means you'll see the euro trade lower and the pound trade higher, i.e. this currency pair trade lower on an agreement on the Northern Ireland protocol. So keep in mind on that. You've got the technicals and you've got the potential fundamentals playing into this particular currency pair. So well worth keeping an eye on. And again, if you're limited for your time, then that is a great little strategy to be using. You might only have 2 or 3 trades a month, and there's nothing wrong with that. Often, if you are struggling with your trading, and I say it to all my students at the City Traders, if you're struggling with your trading, then dial it up, go up to the higher time frame charts, trade less. We all know the biggest problem with traders when they come into the markets for the first time are the emotions, the psychological aspect of it. Clearly, if that is the case, and I believe it is the case, if that is the case, then clearly it stands to reason that the less you trade, the more likely you are not to fall foul of the emotions. I.e., the less you trade, the less emotional you will be. We know that's the biggest killer. So dialing it up, nothing wrong with that at all. Okay, so I did mention the Australian against the US, against the New Zealand dollar. Okay, so this is showing you real strength in this currency pair. This is the daily chart, moved healthily up from 104. We are coming into a level of resistance in here at the moment. I am watching this. Okay, I'm looking at this band of resistance to the upside, in particular around this zone here. Okay, I'm not able to sell it at the moment, but I'll be looking over the next couple of days. And if you're going to be tuning in, we'll look at it on Wednesday. We'll see how it is reacting at this zone. And of course, we've got the RBNZ to contend with. But I'm looking at this zone to potentially hold this, okay, for now. So I'll be looking for price action that's going to give me an indication that we're going to see a bit of a reversal on this currency pair. I would be, looking at, well, the next massive level of resistance is at 1150. Okay, we're pretty close to that at the moment. I'm looking at this top up here, this top. This is the daily level. Each one of those. This is interesting, actually. I just each one of these levels up. I'm looking at that bearish pattern, bearish engulfer. Yep. Whoops, daisy. Beg your pardon. Bearish engulfer there. By the way, very soon, I understand you'll be able to trade the TradingView platform that I'm using at the moment with your Eightcap broker platform, which is really exciting news. Bearish engulfing patterns here, bearish pattern here. Well, you've got a bearish doji and a bearish aftermath here. You've got a triple top coming in here. So 111.50 is the next level of resistance. So selling anything into that with stops above 11.50 most probably makes for not a bad trade. But again, I'm waiting for price action to confirm that for me for potential reversal back down to the sort of the 108 zone. So holding back, waiting for levels. But I'm thinking that the New Zealand dollar, especially this week, if they do deliver a 50 basis point rise, this is going to roll off pretty quickly, in my opinion. And I think just because the analysts are calling now for a pause or a reduction in the rates, I'm not necessarily too sure about that. So I think this is a bit of an overreaction to what you're seeing in with the sort of the analysts or economic bias. I'm thinking more likely that is going to be a reversal. But I need to have price action to confirm that. Unfortunately, or fortunately, I should say, the days of me guessing what I think is going to happen are long gone. I think I was doing that, as I say, in 2005, 2006, looking back on it. And that's what, as I say, cost me a lot of money. Okay, so that's basically my view at the moment. I'm running a little bit out of time, a little bit over the top here. Thanks for tuning in. You've got my biases there. I'd say a bit of a down bias for the US dollar this week. A really good run last week, and rightly so, on inflation. But you do have to bear in mind that the inflation story is not just solely related to the US. You've got all the other developed economies all having the same issue. And remember, when you're buying the dollar, you're buying it against other currencies. They're all suffering from the same problem as well. Inflation pressures are there as well, as certainly in the UK, the Eurozone, Australia, for example, 7.8% inflation last time. So this inflation is still there as well. Remember, if you're pitching dollar against those, well, you've got to think that the inflation is falling in those countries, and it's not. So the dollar is mostly running out a little bit of steam. Not expecting fireworks to the downside, but certainly expecting maybe a downward bias for this week. And you've got some naked trade setups there to benefit. If you want to have a quick look at gold, same type of thing happening in gold as well. Gold, of course, priced in the US dollar. So that's basically what. The reason why I got told you so on this is because this is our trade in our trading room a couple of weeks ago, where we had this bearish engulfing pattern, the naked setup, for this trade lower, and it's exactly what happened. So I can take that off now because it's for a different story. But there we go. Let's just cancel that. Move it. There we go. So now in gold, just before I finish, we have got this bullish pin bar. Okay, gold coming into this level of support. Big swing high. Led to that big move off around the 18. Got close to it. Got to 18, 17. Bullish pin bar from Friday. This is, if you're seeing the dollar weakness, you'll see gold back up to 18.75, and then possibly seeing a 19 print this week as well. So I'm expecting the same type of price action, bullish pin bar, to reflect in gold as well. So all to play for. Okay, so thanks for tuning in. As I say, this is my last Monday. I will be here on Wednesday going through some analysis as well. The last couple of Wednesdays, I've been showing you some trade strategies that I trade, just basic price action. We'll look more on the lower time frame charts for that as well, seeing if there are any intraday setups that we can be trading. If you're not there for Wednesday, thanks for tuning in for the last 4 Mondays with me. I love doing these sessions here with the trade zone for Eightcap. Delighted to be invited. And next month we are going to be honoured with the presence of Andy Mitchum. For those that don't know, sets up and runs the Forex trading coach. He'll be on. He will be at a different time because Andrew is basically in New Zealand, and he will be coming on UK time at about 5 a.m., which is, even for me, normally at my screen is pretty early, but even for me, that's a little bit rich. But you can watch him live at 5 a.m. UK time. But if you do miss that, then it's going to be recorded as well. So as long as you're registered, and clearly you are registered because you're watching me today, you can get it on catch up as well. So you can watch Andrew Mitchum from the Forex Trading Coach taking part for the month of March doing this session. So I'm super excited about that, catching up on the replays. But as I say, I'll be here on Wednesday, so I look forward to seeing you there. Make an effort, come say hi, and see what we're having in store. Okay, thanks guys for tuning in. Have a good week. See you soon.